Netflix released its latest earnings after the closing bell yesterday. The company says growth slowed a bit in the second quarter, but it did reach a very big milestone. Samuel Burke is here with more. Samuel, Netflix, everybody talks about the shows. Everybody's talking about the stock today as well.
Yeah, it was actually up about 2% yesterday after the news. They were pretty much in line with analyst estimates, but that big milestone that you mentioned, 50 million subscribers. But forget all of that because it's clear that Netflix has its eye on one prize, and that's the international market. I think you can divide Netflix history and their strategies into four clear parts. First, they went DVD, then they were about streaming, then the original series like Orange is the New Black, and now clearly they have their eyes on expanding, and in September that's coming to a lot of markets in Europe, but that's going to cost a lot of money. Netflix says it's going to be a lot of money and they're going to have to spend on marketing, but the analysts tell me that it's a lot of content that they're going to have to spend.
I think this is the question. They have been ahead of the curve. They've been very smart the way they're positioning themselves. They really came back from what could have sunk the company, some disastrous customer relation moves, but everyone's kind of wondering if the low-hanging fruit is already picked, and now it's going to be more expensive and harder for them to deliver.
Yeah, and let's just put up that stock chart just because nobody ever forgets about that big dip that they had about 3 years ago. Right? When you look there right after the 2011 there on the chart, Netflix announced that it was going to break up into kind of two different companies, DVD and streaming. The stock market investors hated that, and they've been able to recover though. You see that big dip and they've come back up, but people are always fearful that could be right around the corner, and especially look, the price in 2013, the stock went up 300%. Year to date right now, we're at about 25% up. I mean, that is a lot to go up in a very short amount of time.
Did they talk about this content, if they're going to have to pay up for content, or what their plan is to stay ahead? Because now they're going against, we saw this consolidation. People are getting big. Content providers are coming together. Is that going to change things for Netflix?
It was very interesting. They said all the money is going to be on marketing. They're not actually concerned about content costs, which really surprised a lot of analysts because everybody says when you go into these local markets, you do have to buy a little bit of local content, maybe sometimes local language content. And Netflix doesn't own the rights to some of their own shows, House of Cards, and all of these international markets. But they said, as long as we are talking directly with producers, not the big content creators from companies like 21st Century Fox or our own parent company, Time Warner, they said, as long as we're just talking to the producers of this content, they're not so afraid of all the content costs, which so many people see coming. So that's their take. They say all the money is going to be spent on marketing, but not everybody believes that.
And no doubt they're fishing around for their next big hit and what the consumer is going to want to have next.